week is not only bad news for investors, but could also hurt motorists and taxi commuters.
Earlier this month, pundits were predicting a small decrease perhaps in the price of petrol next month, but it now seems that we're driving towards another hike in the fuel price. This would be the sixth straight increase in the price at the pumps. Well, fuel fell to below 14 Rand in February and March. It's since been rising, and 95 unleaded fuel, the most expensive fuel, is now soaring above 16 Rand per litre inland.
Well, the price at the pumps is determined by the level of the Rand and the global price of oil. In the previous month, the Rand touched 15 Rand for a second time earlier this week. These are levels that before this week had last been seen in the middle of 2016. At the close of business, the Rand trading at 14 Rand 80 to the dollar was more than 11% lower than it was at the start of the month.
So it was an alarming start to the week. South Africans woke up on Monday to learn that the Rand weakened to 15 Rand 70 briefly against the dollar in the early hours of the morning.
Well, that was just a 10% drop in just one day. Let's have a look at what's been weighing on the Rand, and it is indeed the whole world. Well, investors have become more risk averse when it comes to emerging markets, including South Africa. The Rand is often seen as a proxy investment for emerging markets that have been hit by an economic crisis in Turkey.
After the Turkish lira lost some 20% against the US dollar, President Donald Trump doubled tariffs on that country. So the Rand was caught up in the so-called contagion. There are also local factors, including fears associated with land policy. Tuesday was a slightly more positive day, as Stats SA data showed that mining production rose by 2.8% in June on a year-on-year basis. This was the first positive annual number in 4 months.
However, Goldfields announced that it was set to chop some just over 1,500 jobs over the next 3 years or so. Midweek, Moody's ratings agency put out a warning statement saying it was concerned that South Africa would not be able to achieve fiscal consolidation at the levels previously promised, meaning that our debt is not coming down as hoped. And on Thursday, data suggesting that the consumer is in bad shape came out. Retail sales reportedly rose to 0.7%, while the market had expected a rise of 2.2%. All of this has created a storm of uncertainty that continues to blow the Rand.
Right, let's look at how the markets performed today. Earlier, our colleague Rabile caught up with market analyst Warwick Lucas. Let's listen in.
We're obviously getting hit on two fronts. Some emerging markets spillover sentiment from Turkish issues. Although I must say, I think emerging markets and traders in them have grown up quite a bit since the 90s. I mean, once upon a time, emerging markets were really niche. I mean, they are now absolutely enormous compared to what they were then. I mean, China's the third biggest global stock market, for example. So, overall, I think we've got some more sophisticated trade there. But the other issue for South Africa, notwithstanding some positive sort of noises there on trade, I think there's some long miles to go. And that's clearly going to spill over on SA as well. So, yeah, we really are getting crunched on a few fronts here. We've got elections coming, which means political stasis on the fiscal front for at least another 9 months or so. We have a trade war scenario. We generally have an extremely weak consumer and employer scenario. So all in all, I mean, it's a pretty tricky environment. I mean, Moody's must be looking at us very skewly right now, and I guess there's a serious risk of downgrade there. And I think the only play that we can bring now to keep from downgrade is to basically show a bit of growth, and for that, in the short term, given this environment, given the constraints, we probably actually need the currency to weaken a bit further. And if I was in Saab's position,
So you're basically linking this now to the South African Reserve Bank and saying that they certainly need to intervene with regards to where our currency sits right now.
I think it would be the helpful option. I mean, if we look at some of the results that have been coming out in the last few weeks, I mean, it paints a miserable picture across the boards. The banks have got capacity to lend, but they've got no decent loans to make, really. Employers like the mines are cutting back because they're getting crushed under the basic rand prices of the likes of platinum and gold. And consumer companies are showing that consumers have seriously pulled in their baskets already.
Yeah, I think that is a message that clearly needs to go out to the Reserve Bank there. Speaking of which, of course, the EFF as well, saying that they've got an amendment bill for the South African Reserve Bank to perhaps change their constitution and make government the sole shareholder of the South African Reserve Bank. We'll see how that goes. But in equity news as well, things that came out this week particularly, was a massive week for the banks. Also, Standard Bank coming out with its earnings. And as you said, capacity to lend, but certainly no growth in that market.
Absolutely. I mean, we were looking there, it's 5%. I mean, that's negligible. I mean, I'm sure a good effort under a very trying environment.
Low estimates, and of course, as well.
Yeah, but clearly focusing on just making sure they don't get bad loans going there and don't make bad loans going forward. I mean, this isn't an environment where they can really chase good credit.
Yeah, the likes of Goldfields as well, coming out firstly with 1,560 job cuts, and then really the impairments clearly showing the picture. They only have one mine though in South Africa, that is, and one would think that they'd be able to get it right after around 8 years or so, but still clearly not doing it.
Absolutely. It's obviously a very tricky mine with a lot of technical issues. We're talking about mechanization at below 3,000 meters. I mean, that's certainly extreme depths we're working at with the technology. I mean, sure, we've got mechanization right at other mines, but that kind of depth and on that kind of scale, they're basically pushing new boundaries, and sadly that can often mean some very big school fees.
What else stood out for you this week?
Basically the consumer stocks. I mean, they were pretty miserable. So we saw the likes of City Lodge down 9% there on headlines. We've seen Tiger Brands. Okay, we know they had listeriosis, but even now this next trading statement coming out is the listeriosis effects reported in the first half, which was pretty clearly they were quite miserable outside of the problems at Enterprise Foods. So all in all, it's a pretty ugly environment we've seen there with consumers.
Yeah, that paints a gloomy picture for South Africa's economy in itself. Earlier on, you spoke about Moody's as well, and they're saying, well, we're overestimating the amount of growth we're going to have. We're missing every single target, particularly when it comes to revenue growth. When it comes to expenditure as well, we're probably going to overspend. Surely a downgrade is on the cards here.
Yeah, I mean, I would have thought so. As I say, the only way we can get out of it is if we show growth. And quite frankly, I think we need to bring political matters to a head quite soon, and we probably need to bring election issues to a head quite soon and deal with them so that South Africa can actually get back to work again.
Yeah. Do you think we will, though? I mean, the problem is, as you say, electioneering has taken over in many instances and will continue to do so more vigorously as we head towards elections next year. But do you think we can perhaps, in the interim, just put in a couple of policies in place that may be able to help us take advantage of some sort of growth?
I think the policies that we need to be fairly neutral. That they don't become lightning rods for political issues. So they've got to be relatively simple things, something that's, for example, kind of a tax incentive to encourage investment, or accelerating building plans, basically low-hanging fruit. And I'm sure there's probably not a lot of that hanging around, but we might as well use what we've got. I mean, there still are municipalities clogging up building pipelines, and there must be something that can be done there.
This is definitely one of the reasons behind the rand. Let's have a look at